Hey traders, my name is Lucky from Currency Academy. In this video, I will show you how to trade the ultimate break and retest strategy using market structure for sniper entries. If your break and retest trades often fake out or fail, this will change the way you see the market. Stay tuned. What is break and retest? A break is when price break above or below a key level, support or resistance or structure. A retest is when price returns to test the broken level before continuing to the upside or the downside. An example of a break and retest. This is a bullish structure when price is making a series of higher highs, higher lows, higher highs, higher lows, and higher highs. We need to see the price break above this resistance, making it a support. Once price break above this resistance, we need to see the price pull back into that key area, making it a support for price to make a directional move to the upside. This is where we enter and put our stop loss below, targeting the next highs for profit. In this case, this is a scenario of a sell side. This is a bear market when price is making a series of lower lows, lower highs, lower lows, lower highs, lower lows. So we need to see the former support taken out, and this support now turns to resistance. Price pull it back to that resistance. And this is where we take our entry with our stops above, and we target the downside for the final move. In a case whereby the market is trending upwards, retesting key levels. When price happens to break against the trend direction, wait for a confirmation of reversal before trusting the retest. If market is making a series of higher highs, higher lows, higher highs, higher lows, higher highs, and the price break and change direction, wait for a confirmation from this resistance level, and you also wait for a confirmation inside this resistance level, either a double top or a confirmation. This is also a confirmation advice you look out for on the lower time frame when the price is switching into a downtrend. This is from the uptrend and price is changing direction and retesting this key area as a break or retest and moving to the direction. You need to look for this pattern inside this key zone in order for you to confirm the reversal before trusting the retest. Not all retests are valid. Structures must align before they are valid. The price can actually just retest this former structure here, and it seems as if the price is making a series of lower lows, but it's not. The market can just retest and just buy from this area. So we need to wait for confirmation on this area before we can trust the retest of the reversal to the downside. Now we are going to look at how market structure validates break and retest. In order for break and retest to be validated, we need to follow the market structure. We need to be at the same position as the market structure. When the market is making a series of higher highs, higher lows, higher highs, higher lows, higher highs, this is the market structure. This is how the market moves. You understand? So in the case whereby we are waiting for price to retest into this key area and buy from this key area, the price can actually just push through this area and move to the second direction without you being noticed, thinking the price is going towards your direction. So in order to avoid this, we need to identify the market structure so that we can be in line with the market and follow the trend to the upside. Same thing applies on the sell side, whereby the market is trending downward. In order for us to be participating in this downtrend, we need to identify the market structure so that we can be in line in the market direction, so we don't make errors trading inside market structure. So we need to identify the lower lows, lower highs, lower lows, lower highs, and lower lows in order for us to be in line, in check of the market. So without you identifying this market structure, you are going to be trading against the market. When you are trading against the market, you will likely not make profits because you are mostly going to be getting stopped out because you are not in the same direction as the market. The market does not care about you. The market moves in direction. So you need to understand the market structure to be able to follow the market to the same direction and be in line with the market.
On this gold chart, I'm going to guide you through on how to execute the ultimate break and retest strategy. You can see right here that on this chart, the market is making series of higher highs, higher lows, higher highs. Over here, the market shifts, and in order to confirm this shift, we need to wait for a confirmation before we ride the market to the downside. Now, how do we confirm this shift? If you see over here that the market retested this area of a support that turns resistance. As the market retests this area, we want to look at a confirmation in order for this shift to be valid. We want to look at a confirmation right here. And this is the type of confirmation we are looking for a sell. This is a buy by us if you are looking for a buy. So on this area right here, we want to look at a shift of confirmation before we can confidently enter this trade for a sell. We want to look at a higher highs, higher lows, higher highs. This is the shift right here, and this is the confirmation you need to enter this trade for a sell, to ride it to the downside. And this is how the trade is going to look like if you are to enter. Once price visits this area, you want to look at a shift, and then you consider using this place as your resistance. Price breakthrough and retest it. This is your confirmation. This is how your trade should look like. You enter around here. Your stop loss is going to be above this high, and you target this low for your profit. You can see how the ultimate break and retest strategy works. So I'm going to show you another live example now. On this chart setup, we want to first identify the market structure so we know which direction the market is actually trading towards. So first, we want to look at the market making a series of higher highs, higher lows, higher highs, higher lows. The market failed to make a new high right here. So this is also a signal that the market is changing character. The market is making another structure, not a bullish structure. So now the market changes structure and make these new lows right here, breaking these lows and this low. But this low is what validates the market changes structure, market changing character. So with this low, we are going to be looking at the market retesting this low, which signals to us that this is our previous support right here. Now, this support needs to be broken and turn into a resistance. Now, you can see that the market break this support downwards. So we need to be patient and wait for the market to retest this resistance right here. So around this area, this is where you're going to enter. You put your stop loss above this level, and you're going to target the next zone or whatever place that you are targeting for profit. On a lower time frame, you can also look at this zone right here for a market shift. So if you want to look at this case, the market did actually retest after making the shift. It made a higher highs, higher lows, higher highs, then the market broke. It's supposed to retest, but in this case it didn't, so you would have missed this in case you want to look for a confirmation entry to enter this pattern. So in most cases, the market don't actually make this confirmation pattern on a lower time frame. So that's why you see you actually need to execute on your zone. So it is also advisable to execute on your zone area on time to get most of the trade and to catch more trades. On this diagram right here, we also want to look at the price making a series of higher highs and higher lows. You can see that this market is a bullish market. This market has been trending upward, starting from this point, making a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So this is a confirmed bullish structure. In order for us to trade this properly with our setup, now we've identified the market structure, which tells us that this market is trading upwards. So we are looking for a buy opportunity. Now, in order for us to look at a buy opportunity, we need to plot out our zone. Now, where is the resistance that turns support? Over here, we have our resistance right here that turns support. So we are waiting for price to trade and break this level and then retest this level. So we don't just enter when price retest this level. We want to wait for a confirmation as well. So that confirmation is what is going to validate this setup, because the price can actually just do whatever it takes right here and just drop. You understand? So we might take a loss right here if we still enter for a risk entry. So it's advisable to enter after the confirmation. The confirmation is what's going to give you confidence in this trade before you can actually enter your position and then participate in the buy of the uptrend. So in these cases, we need to wait for this confirmation. Now, this confirmation, how do we identify it? You can see that the market, after retesting this zone, the market out to change character over here, which is the market made a series of lows, the highs, the lows, and then give us another bullish structure again, and then retest. You get it? So on this retest, the market still try to make a new highs and then push backwards. So you haven't got your valid confirmation yet, but on this break right here was your bullish confirmation. So if this one is very complex, and if you want to trade a pattern like this, you want to wait for the market to break these highs and then come back to it and retest it before your entry. On these cases, the market will return to this support level, so we need to wait for another opportunity because this is already a bullish trend. So we need to wait for the price to break the new highs and then retest it in order for us to have an opportunity to participate in the buy. Now on this part here where the market breaks and you can see that the market retested, so this is supposed to be an opportunity for you to enter. You don't need to look for a confirmation because you've already had a confirmation here that the market is trending upwards. So you can just enter for the risk entry. Your stop loss is below and you can target 2% of your account. So this is how your trade is going to look like when you enter for. And of course, if you want to still enter from this place for a risk entry, it's advisable to, and your stop loss is going to be at the low before the highs. So always your stop loss is supposed to be at the lows that caused the recent highs. So your stop loss is going to be around there, and you're going to target like 2% of the amount you are risking. So this is also going to be a winning trade if you are to enter for your risk entry. So the breakout and the retest is a nice strategy. You can backtest this and see for yourself, but always combine the market structure while trading the breakout and retest. And when price gets to your zone, make sure you look for a confirmation to the direction you are expecting the market to move towards before you enter for a buy or a sell. Make sure your market structure is attached to your breakout and retest. This is going to save you a lot of time and money, so you don't blow your account and you don't risk a lot on a trade whereby you are not confident in the direction the market is going. Always cross-check your market structure. It's very vital. It gives you an edge over the market on what the market is going to do, where the price is heading towards next. So we are going to look at the common mistakes to avoid while trading this breakout and retest strategy. So entering without market structure confirmation. We've talked about this. If you do not identify your market structure, you cannot know where price is heading to next or what price is likely to do next. So you need to identify your market structure confirmation to know whether you are buying or you're selling. So these are common mistakes you need to identify first, or you likely make if you are trading this setup. So trading the first touch without confirmation, like I explained, when price gets to your zone, you should be looking out, waiting for price to confirm your entry. When price gets to your zone, you should be looking at price confirmation before entering for a buy or a sell. As soon as price gets to your support or resistance level, don't just execute, you wait for a confirmation. So that confirmation is going to give you an edge on what price is likely to do next, or the direction price is heading towards next. If you are looking for a sell and price retest to your resistance level, you wait for a confirmation, and once you get your confirmation, you can then execute your trades, and that will give you more confidence that what you're doing is right. So by the time you do that consistency, you see that you are ahead of the market and you are making profit along the way. Now the third one is ignoring internal structure confirmation of lower time frame. That same setup where price tests your resistance or a support, you need to go to a lower time frame. Don't just say, okay, since this is the higher time frame, like the 1 hour, the price is going to make the confirmation on the 1 hour and then I'm going to enter. No, you need to go to the lower time frame, like the 15 minutes or 5 minutes. After price has gotten to your resistance or support, go to the lower time frame. Look for those patterns whereby I showed you earlier on the other videos. Look for those patterns and then participate on those moves that likely occurred after the price has made the pattern. So that is your edge of what price is likely to do next. So if you get an idea of what price is likely to do next, you won't fail trading this strategy. So I bet you'll be successful after you backtest this a lot of time and you see how it works. Find your own confirmation. There are a lot of confirmation you can use when price gets to either your support or resistance level. So there is double top, there is head and shoulders. So there are some patterns you can check on Google's, you can check online before you enter for a buy or sell. Look for confirmation that will strengthen your edge over the market. So guys, that is how I trade the ultimate break and retest strategy using market structure. This gives you cleaner, more confident entries. If you find this video helpful, like, comment your questions and follow for more smart structure content. Join HCFX Academy if you are ready to master this. If you want me to drop more content concerning market structure, break and retest, liquidity, send a comment on the comment section, liquidity, market structure or break of structure. I'll see you guys in the next video. Peace out.